So let's have a look at Pillar 5, the Fibonacci Retracement. So here we have the Aussie CAD pair, and what we want to do first before we use our Fibonacci Retracement tool is we want to identify the trend. So what I generally do is I go to weekly, I have a look at the trend. So here we can see it's just dropped off here. It's retraced backwards, and it's still a lower high. And we're just making lower highs, lower highs, and it's just dropping off. So what we want to do is we've identified that. That's quite simple. Let's go back to the daily. Back at the daily, now let's pull out our Fibonacci retracement tool so we know we're in a downtrend. So what we want to do is we want to drag the tool from top to bottom. So that's how we apply the Fibonacci tool to a downtrend. So drag it from the top to the bottom. I just use the highest point on the most recent highest pivot, which is here. So I refer to these as pivots. So see how the price has come up and then it's corrected back downwards towards the. So here we also have another pivot. We have a pivot here. You could refer to that as a pivot, but you know, you're not going to really bother on a retracement there. So it has to be a pivot, and it has to be significant. So we have to see a drop off, and then we have to find a bottom. So what we'll do here is I want to use this retracement where it's sharply retraced backwards here. So as we're this is a live chart, you know, price is still we're still producing price action, and it hasn't come in the direction. If I can give you a good example, so I want to go back to the most recent lower low, so which is here, right here. So we broke this lower low, we broke through this support and came through here, so we've now made another lower low on the daily. So what I'll do is I'll use, because I've used this lower low, we'll have a look and we'll see here, see how we've retraced. So we've gone off this, the highest point here, and see how we've retraced back to this 38.2 level. Now I don't use a 38.2 level to enter the market, but what I'm going to do here is I'm going to mark it. So I'll get my support and resistance field, which is a horizontal line. I bring it across here, so I know that I'm interested around this point. And look at that. So we see here, now let's look left, and guess what? It's acted as support here. So what we want to do now is I want to drag this tool down here to this lower high, or the pivot point, and I want to have a look. Let's see if it comes back to the 61.8. So bring in that, and there we go. Look, 61.8, and guess what we have? I referred to confluence, and this is a great example of confluence. We have support and resistance. We look right, 61.8 level. So what would I be doing here if I was looking to enter the market? Let's just imagine this price action from here hasn't taken place. The only price action that's produced itself is we've come up here and we've tested this point here, and it's come back downwards. So we'll ignore this area here that's taken place. From this candle onwards, let's just imagine as if it weren't there. So what I would do here is I'm going to just pull up another horizontal line just so I can show you. There we go. So I'm going to mark that on the 50 because I can use the 50 as an entry. So what I would do is I would place my 61.8 stop above here. So see how two simple tools has allowed us to enter the market. And then see here, so we'll use our crosshair just to measure, just to show you how much risk there was in this trade. So how many pips we were looking at. So about 50 pips stop loss, but to be honest, I would probably look to go maybe 65, 70 just to give it a bit of breathing space, so just in case, because we're imagining this price action never happened here. So what about if the price could have stayed around this level and just punched through this level but not closed above it, but we don't want our stop loss to get taken out because we don't want to keep re-entering the trade. So we want to give it some breathing space, so I probably maybe would have extended. Let's have a look here. Remember, we're long-term traders, so we're not looking for that short-term move. So we're looking to stay in this market if we were to trade it for a very long time. We could even bring it back here. See here? It's acted as, say short-term support. So what we do is I'd get this crosshair. We've entered at the 50. There we go. It's about 100 pip stop loss. I'd probably do that just in case it did punch through this level. For some, we got a lot of volatility in the market. We don't want to get taken out. But I don't really suggest 50 pip stop losses. They're just not enough breathing space for the trade. And you'll see you're really going to need that breathing space. Look, this ended up nicely, but it's because price action's already been produced in this direction, and you don't know when you're taking this trade, and you want to feel comfortable that it's got enough breathing space. So what I want to do is I just want to show you a quick example of we'll find a pair that's moving in a bullish direction, because this is how you use it on a bearish direction for the Fibonacci retracement. So, geez, there's a lot of bearish action happening in the market at the moment, so it's going to be a little bit harder to find that that bullish action. Hold on. We'll go to the US dollar Singapore. Oh no, I want to find the US dollar yen. Hold on a sec, guys. I'll just go here. Let's go dollar yen. Okay. Just close this. Okay. So we've got the dollar yen here. I'm going to go to the weekly. I'm going to just have to imagine again that some of this price action hasn't occurred. So look, let's just say for instance we want to get in on this bullish trend. We want to use that 61 or the 50% of the 61.8 retracement. Okay, so what we do is we'll see here. We're just going to light this line up here. We want to get in at a pivot point, so the lowest point. So I would say it'd be around here. Okay. So what I do is I pull out my Fibonacci retracement. I'd start from bottom to top. See here? So this is imagining we imagine that this trend fundamentals are pointing to the dollar is just going to shoot through it. We're bullish on it, and it's just going to go. It's going to break through the support. But we want to wait for this retracement, and then we want to enter the market. So we still believe that there's more bullish action to be happening, but we want to get in on this retracement. So yeah, that's just showing you how to drag the tool on a bullish pair. And so you go from bottom to top. Here I can't really give you a good example because there's really not much support and resistance. Like there's no reason for me to believe that at this point in time that you can be bullish on this pair. But it's the first one that I could think of that would come to my head. So yeah, that's how you use the Fibonacci retracement tool.